and just what might the latest round of tariffs, courtesy of the Trump administration, might mean for emerging markets like the Philippines. For more on that, I'm joined by Charlene Reyes, an analyst at First Resources Management and Securities Corporation. Charlene, thanks for joining us. Of course, this isn't the only issue facing local markets right now, but it seems like every day we hear of new tariffs coming from the Trump administration. First, the revival of those $50 billion in tariffs on Chinese imports, and now possible metal imports on their co-NAFTA members, Mexico, Canada, and even on the European Union. What does this mean for markets, both global and local, in terms of sentiment, in terms of jitters and fears? Can you tell us what this might mean?
I think this could be a drag in our markets. The tariffs, it might not have a direct impact on our country, but then these tariffs, just like in the previous months, when other global news are starting to pop up, even the trade war. So they're all dragging the markets, even the Asian market. So I think it will continue to be a drag in the Philippine markets.
All right, and it's coming also at a very bad time because we can see the PSE was losing ground. In fact, today at the open, we're also seeing it starting to slip. And yesterday's seeming revival seems to have faded or has been snapped already. We're still about 3 to 4% away from bear market territory. Charlene, some people are pegging it at 7,262. How should we fear an attack of the bears in the coming weeks, and how much are we in danger of falling into bear market territory, given how close we are now?
Well, most of us were expecting that, we hope that the index would maintain around 7,500, but then it already pierced through it, so we're now maintaining 7,400, which is for us a bearish signal already. But then we're still hovering around that, so it's somehow the face of nearing to a bear signal. So not yet. We're looking at around 7,300, especially on such factors because of faster inflation rate, with the global oil prices increasing, and then the MSCI and FTSE, which in turn could lead to more foreign outflows. So that would continue to drag our markets right now.
So you've got foreign outflows, you've got tepid trading volume. What's going in the PSE's favor to try to keep it from falling into the hands or the paws of these bears?
Well, I think right now there's no catalyst to push it up. I think we're still waiting for BSP's move to still continue to regulate inflation, because right now I think they've announced a decrease in RRR, so that will another add to the liquidity. So another inflationary pressures is really there.
And let's talk about inflation there, because we did see the BSP warning us of inflation in May ranging between 4.6 to 5.4%, Charlie. In fact, you're seeing that the recent April's inflation reading at the highest in over 5 years. Now, authorities keep on saying that inflation is transitory and will start to ease off and is under control. Tell me, are markets buying that explanation?
I think for me, in First Resources, we're still expecting faster inflation rate even in May, mainly because we're expecting around higher than April's 4.5%, around 4.7 to 5%, mainly because of the increasing global prices. So somehow, fortunately, it eased, but we're still expecting it to increase because OPEC is pushing through with cutting supply. And then in terms of inflation, we're still looking at, we're still monitoring it also. We're still looking at BSP if it will trigger them again to increase the interest rates. So it's still, we're still being cautious right now.
But how effective is a rate hike really in controlling oil prices? They seem to be quite different. It seems that the BSP's rate hike, I mean, it's something, regardless if they hike or not, it seems that oil prices will do what they will do depending on the supply-demand dynamics.
We're a major importer, so it really affects us. It would slow our domestic growth.
So how effective is a BSP rate cut then? A rate hike, I mean, if we keep on seeing oil actually rising? Is this really something they can mitigate with a rate hike?
It's different things, but then it would help prices to go down. Inflation rate will help regulate inflation rate as a whole.
All right. We see the likes also of Jollibee and URC taking significant hits. We saw the industrials counter the worst performer yesterday, and some are saying that these stocks are trembling under the weight of higher inflation expectations. There you see URC at the top of the top line here, up about 90 centavos at the open so far today, and Jollibee also seeing some gains. But still, we see that these two seem to be susceptible to these higher inflation concerns. What's First Resources read on how these two particular consumer stocks might do if inflation continues to rise?
Inflation, it really affects consumer stocks because it could dampen their spending because it's higher cost of goods sold, which could affect their revenues. So we think that because of the faster inflation rate, URC and Jollibee's, because investors are anticipating faster inflation rate, so this consumer companies there was a sell-off with them yesterday, causing their stock prices to drop. And then in terms of Jollibee, we've noticed Jollibee that it has been resilient with even though our market is dropping, Jollibee is being resilient. It's staying above 280 to 300 levels. So it's nice because the company was able to they sacrificed profit margins in order for them to maintain the volume growth of their clients. But then since Jollibee was maintaining that level, it was form of a correction, and then also concerns on higher inflation. In terms of URC is also having problems because of higher costs, higher expenses. Their domestic segment also dropped, but it was offset by their international segment. So inflation is really the concern with these consumer stocks.
Now, another consumer stock that also reported higher costs is a company that's expected to do a big follow-on offer at the end of the year, San Miguel Food and Beverage. But President Ramon Ang has said that there is a chance that they might see the follow-on offer delayed to early 2019. Now, he's saying that it's mostly regulatory issues, but are there other concerns that food and beverage needs to watch out for with regards to this follow-on offer?
I think in every follow-on offering, you have to consider market conditions. So the inflation is really there. So I think they're also considering that. But then I've seen Pure Foods or Food and Beverage that they wanted to push through at once with their follow-on offering, but then there are a lot of things that need to be considered, like regulatory approvals, reportorial requirements, and then they have to hold different stockholders meeting to get the approval of their small and large stockholders. So I think that's just the part that's just the reasons why they're delaying their follow-on offering. But then I've heard their chief that they stated that once everything is complete, they will push through it. They will push through their follow-on offering despite any market conditions.
And is First Resources' outlook on this follow-on offer positive, negative? Are you guys one of the believers that this company might actually be worth $12 billion, as Ramon Ang has said?
Yeah, we're positive about the company. The company is good, but then we're still also concerned with the market conditions. So maybe in 2019, we have a good outlook on food and beverage.
Now, let's go back to oil. Everybody's groaning over those oil prices we were talking about, Charlene. Philippine Airlines raising some alarm bells. They're talking about higher jet fuel costs. They're talking about peso weakness, seeing them now looking to impose higher fuel surcharges. What's your outlook on Philippine Airlines? And we might as well throw in Cebu Pacific because it seems that higher fuel costs are impacting the airline industry itself. But let's start off with Pal. What's your outlook on Philippine Airlines?
Well, Philippine Airlines is aiming to recover from their net loss from first quarter and then previous year. So I think they are seeking for approval for higher surcharge. Mm-hmm. So of course, it's transferring burden to us customers, clients of Philippine Airlines. So I think if the approval would not be given, it would be a negative impact to them, especially that Philippine Airlines consumes around 11 million barrels per day of oil or fuel, and then just a small uptick with any prices would mean a significant effect on the cost of Philippine Airlines. So that's really negative for the company.
So stay away from airlines for now, or are there signs that they might be actually a bit more resilient than we can actually plan for these challenges?
Right now, I think they're on for reconfiguring of routes. So I think it's part of their plan to have efficient and effective routes so that they can minimize some of those routes that are unstable and then transfer their aircraft to more stable routes to have more profit.
All right. And finally, Charlene, before I let you go, we do know that the PSE has also approved Del Monte's planned IPO. Now it's coming up and it's pretty soon. What's First Resources' outlook on this possible first IPO of the year? Good, bad, ugly, pretty? What is it?
We're neutral right now. It's because looking at IPOs, we really consider the financials first. So financials likewise, Del Monte is good. Del Monte has consistent increasing revenues, net income, gross margins around favorable at around 20 to 24%. Although net income margin was very low for 2015 at around 4%, was able to recover just the previous year at 10%. So financials wise, it's good. But then the next thing that we look at is that where will the company use its proceeds? So is it worth our money to invest in something that has future growth? Will we see the company having growth in the future prospects? But then unfortunately, Del Monte will be using the proceeds on their repayment of debts, repayment of their facilities, the leveraging. It may be good for the balance sheet, but then we really advise that you have to take a look at the future prospects of the company before invest in an IPO. But then in the IPO of Del Monte, we're really looking at the price of how will they price? What is the final offer price of the Del Monte? Because right now, because of the weak market, clients or investors are really looking at market opportunities right now. So if they found the Del Monte undervalued, then it will be a sign for a demand for the IPO.
All right, we'll have to wait and see exactly what the market's reaction will be for that. But for now, it seems like a wait and see attitude with all this market volatility that we're seeing right now.
Yeah.
Charlene Reyes from First Resources, thanks for joining us this morning on the broadcast.